Good afternoon, ladies and gents. Welcome to another video brought to you by Total Control Traders. Welcome to a weekend stock pick video. Now this week we're gonna switch it up a little bit, add a couple additional components, and do a trade review, market deep dive on top of our stock pick weekly. Okay, let's get started. First one, SPX. So we were looking at this now. Remember last week's video, the stock pick last week, we said that the market needed to break bull. This is what we were looking at before. This was the inverse head and shoulders. To be exact, the right shoulder was over here. We needed to break over that GP, okay? And we failed it. Now let's take a look at this. Let's take a look at where we rejected from. This 4-hour upper trend line. There was a breakout, fake out. It became a support back here. And then boom, broke down. Multiple rejections again. So this was a key trend line to break over. And yesterday, Friday, was it Friday? Thursday, Friday, I can't remember which day. Thursday was the rejection. Thursday we rejected from that GP alongside that upper trend line. Exactly where we rejected from. Look at that, multiple rejection, okay? And coming Friday, that was the GTFO sign. The thesis no longer valid. Now you look at this inverse head and shoulders right here. It needed to break over that GP. It needed to break over that 4-hour upper trend line. So I guess we'll do the trade review at the same time that we're reviewing SPX. This is when we exited somewhere around here. Somewhere, I can't remember exactly. It was somewhere around here. And we broke under that 4-hour lower trend line. That was the must hold. So when news come out, you know, most of the time news doesn't really matter, but in this case it's a little bit different because it was all of a sudden they're saying 1% increase up until by July, I think it was. And then following that is the Europe war news, and boom, it just went from an inverse head and shoulders all the way back down to negation. Now what we're looking at now, there's a couple of possible scenarios. First one, let's do a regular GP. And the high is, of course, 45.94. That was the must break. So we are right about that 0.5 right now. Now, based on this, if the GP, okay, let's do the possible scenarios here. GP, if the GP were to hold, this is likely going to form a wedge going forward with a new 4-hour lower trend line going somewhere like that. And this can probably be redrawn to the low over here. So this would be the new wedge. That's possible scenario number one. What we'll be looking at will be a bounce to here, kind of a thing. Scenario number one. Scenario number two is if we were to lose the GP, yeah, I don't really see the bounce of 0.5. It's still a possibility. And by the way, that new all-time high thesis is now negated. Part of the message that I shared in our Slack trading group was this one. On Thursday, early in the morning, I said, all right, boys and girls, change your plans. We're adding a bear thesis due to the what is it called? The behavior change. We need to remain agile. In the case that SPX fails, break over the GP, the reverse GP, which is this one that we were looking at. And the reason why I added the bear thesis is when we look at the highs, it was 45.94, 45.91.4, and then the next one we got to was 45.88. It consistently got lower and lower. So it showed that there was a lack of bullish pressure coming in. Now, when we look at this, I added a bear thesis that fail of break GP, we could see a true ABC correction breaking down below 42.22. Now, when we look at the chart on the daily, this could be viewed as A and then B. So the other possible scenario is we're going to be coming back down to that 1-to-1 extension target, lining up with that GP below, as well as the 0.5 retracement from the pandemic. Was this a pandemic? No, 0.5 retracement from September, this big move. So that 0.5 retracement, everything lines up here. So the possible scenario number two is from here, we could be seeing a true ABC coming back down to 39.93. Now, is this going to be a market correction? I don't think it is. Now, when you measure the move versus pandemic, you know, this is a 30-some% drop even if we were to come back down to the 39.93, this will only be a 16% drop. So that's still a decent consolidation, but it's not a correction. With that being said, this is a very well possible scenario, A, B, C, cooling the chart off, and that will be some amazing opportunities coming up. Now, with that being said, let's take a look at the market deep dive, see if this is going to be an actual case. One thing that I worry about, actually quite a few things I worry about. When I look at this, this message was shared on Thursday as well, market targets and that next market bear play. As well as my thoughts where the market is at, where we're going, and what's going to happen after. Now, there were red flags showing up. The sharp pullback that we're looking at. So even if we had made new all-time high, there was going to be a very nice bear play on this. Based on the weekly chart, I'm going to have to clean the chart up a little bit here. Let's just do this one. So based on the weekly chart, if that new all-time high thesis did work out, new all-time high, there's going to be a strong weekly bear divergence. That means we're going to be coming back down, going past that 42.22. Regardless, right now, looking at this is a weekly 8 rejection with chopstick tops. This is very bearish in my personal view. You know, especially with that breakdown of, now we're going to keep that trend line there. There we go. Especially that breakdown of this trend line. We're looking at down at GP at the very minimal. I'm thinking at least the GP. Look at the volume. Now, one thing in our last week's weekly video, or last video, I guess, because we did so much tickers, I got so burnt out, and this is why I guess we're going forward. We'll be covering the market for sure. First, look at the volume. Very minimal bull volume, even though on the hourly was extremely nice move on the way up. Look at this move up. Extremely nice move. 1 hour 8. Boom, 1 hour 8, boom, 1 hour 8, boom, right? And when we look at the volume, no, it's not there. So I completely forgot to look at, when I look back at our Wednesday video, completely slipped my mind to cover that. Decreasing bull volume, that was the GTFO potential on the GP. Anyways, you know, everyone makes mistakes, and that is definitely one of my mistakes. Now, one lesson that we learned from this was to stick to your game plan, exit on the loss of a key trend line, or else, you know, look at this. There was a 8% follow through to the downside. Now we're losing trend line again. What if we were to do another 8% down? That would bring us to that keys, roughly around that key zone down below. So, with that being said, I am majority cash, doing a little bit of a bearish play right now. We did decent, made some okay money on the way up. I wanted to see that new all-time high, so got burnt a little bit, but overall came out positive. And UVXY, not to mention, congrats to our newest member, Hovik, first day in the group, making a killing already off of one of our call-outs. A couple call-outs we had on Friday, and we'll cover that maybe. Actually, yeah, they're on stock picks. Anyways, okay. Let's keep going on this list. Inflation is at 7.5. Sharp drop on 10-year over 2-year. Remember what we talked about, that 10-year over 2-year leading indicator? Yeah, that's been moved up to the top of my watch list now. Look how fast this thing is dropping, okay? Last time we talked about it was around 1.4, 1.44, I think it was. And now we're already at 1.277. Huge. We're coming straight to sub 1 extremely fast. Accelerated selling. Look at this. The 88 guide. We got over the 88 on this one. Boom. Reject. Got over again. Boom. Reject. 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 It just, the 88 guide down on this. Whew. The 10-year over 2-year, it might be a little bit more different this time. I have now set an alert below 1.1. But I think we're approaching that sub 1 extremely fast. So in that case, my view on the market is, even for the pullback to over here, there should be one strong run. Okay, there should be one relatively strong run, whether if it's gonna be new highs or whether it's gonna be a lower high on the monthly before an actual pullback. Based on the 10-year over 2-year. Is coming. Not going to be some time. Even after it reaches sub 1, it's going to take a little while. You know, looking at 6 to 18 months out. But this is a different case because this is accelerated. The run up only took 284 trading days versus before it took 916 trading days. The run down took even shorter period of time. You know, you look at this, ooh, this is actually a huge difference. The last run down took 2100 trading days. This rundown is taking so far 236. That is what, 1/8 of the time period. This rundown is actually faster than when it's run up. Okay, 284 to run it up. So far 232 to run it down. This is getting scary. That's a huge red flag for the market. I'm not saying it's going to be favorable to play bears, but I think ultimately it might be favorable to hold some UVXY volatility or gold or something, you know. Anyways, let's do the third one. US dollars back to pre-2018 crash levels. And we'll look at this. 2018 crash level, that's where we were. This is where we are now. A little bit of a pullback. So that's reason number 4. Number 5, VIX is looking very similar to, what is it? 2018 again. So there was a pop, a slight cool off, and then another pop the next month. So with this a pop, a huge upper wick, same with over here. A slight cool off. Now, are we going to get that huge pop next month? That's reason number 5. Number 6, gold refuses to break down. Now, remember, this was shared on Thursday. And then Friday, one of the call outs was that there is a likely breakout on gold. All right. So that's it for the market. You know, just keep in mind what you're playing. This week's stock pick is going to be something completely different than what you're used to. Okay, due to the market, due to where we're looking, due to the fact that we failed to break the GP, that was a must break for inverse head and shoulders. And with that being said, let's delete this theory now. That is no longer valid. That has been completely negated. Now with this, is there going to be a head and shoulders? No, this one's not a new high. So, you know, depending on how you look at the chart, A, B, C. We're going to watch, same idea. We're going to be watching for that GP. Once this GP fails, that ABC, there's only 2 supports. In my personal view, there's only 2 supports on this. Okay. Coming next week, we're going to watch for that reaction around the GP. If this fails, we're going to be watching down at 42.22, roughly around this area, this key zone, multiple supports from here or the bottom of the zone. If this fails, now, I don't think it's going to fail next week. Again, bears can be strong. If it does fail, regardless of whether it's the next week or the week after, or even the week after, we'll be looking down over here. 4K. That will be the area. That is what I'm thinking. Now, let's get into the stock pick of the week. A little bit exciting. So we did the trade review. We did the market deep dive. VIX is popping. Yeah. Now let's get into the trade review. The stock pick of the week. First one we're going to talk about is gold. Hey, we talked about it on Thursday. Refuses to break down. This lower trend line had to be redrawn a little bit. When we look at this, wick down under, break down fake out, wick down under, and then we got another wick down under. Now the trend line I had before was more so, I think it was somewhere around something like this. Yeah, something like this. The trend line I had before might have been something like this. Can't remember exactly. But with this, you know, breakdown, and it was still another breakdown fake out. So then I decided, you know what? It didn't touch here. This is a huge lower wick. Breakdown fake out, or wick down under, and breakdown fake out. So there must be a better trend line. So then I decided to take a look. You know, looking at this look works out a lot better. This is no huge lower wick, a touch, a bounce, huge lower wick. Look at where it bounced from. Okay, and then a breakdown fake out. Look at those bounces. Right, so that's the lower trend line now. And when we look at it on Thursday, fails to break down. Friday, I said, hey, gold, keep an eye on it. We're going to be watching for that bull break. And when we look at this message, where'd it go? All right, here. Gold, shared at 9:08 a.m. with all these headlines, even for a person that doesn't read news, which me, I don't really read the news, just read the charts. There are some concerns aside from the market thread pinned yesterday. XAU, which is gold, looking for breakout 908. Let's see where the chart's at 908. Right over here. It was a pullback. Okay, it was bull flag, or more than bull flag. It was pullback and then bull flag 908. Okay, bull flag, boom, breakout and back test, sliding along that upper trend line. Huge breakout. Gold is top pick for this next week. This was what was it, 6 months? August. Depending where you look at it from, I would probably maybe even call it from here, April. 6 months to 6 to 10 months roughly. 6 to 10 months of sideways action, depending how you look at it. If you're looking at the beginning of the pennant, it'd be about 6 months. The beginning of the sideways action, it'd be about 10 months. Regardless, this has been a long-term sideways pennant, sideways action, and now we're seeing a very nice actual breakout. Looking like an actual breakout at least. Bull volume coming in. Very nice breakout. There's potential for immediate back test. Now there's no breakout here, no breakout. Wick. Yeah, so this is an actual breakout with volume. With this, gold is this week stock pick number 1. Now the other one, the next one we're going to take a look at is exactly what we talked about, UVXY. We don't talk about this one too often. I don't think we've actually covered it outside of our trading group. And the reason why I say UVXY, when we talk UVXY, the chart that you should actually look at, just as when you talk SPXL, SOXL, you should look at SOXX, SPXL, you should look at SPY. With UVXY, you should look at VIX. Okay, when we look at VIX here, exactly what the point that we just talked about. There's potential for repeat of 2018. Where is that? Is that monthly chart? Can't remember what exactly we were looking at before. Yeah, I think it's monthly chart. So looking at this, nope, there's weekly chart. Anyways, regardless, chart looking strong. Now with this, with what's going on in the market, with what's going on over the news headlines, potential black swan, potential pulling back to the SPX 4K, UVXY, I'm looking to hold a core position from here. It's a good position. This bear divergence, lack of follow through. All right, back test this long-term wedge, upper trend line, boom, coming back down, forming a higher low. There is a chance that this is gonna continue to pop on VIX. So keep an eye on VIX. Keep a core in it. That would be my personal strategy. And then, so that's pick number 2. UVXY, but you want to be taking a look at the VIX chart instead. Pick number 3 for this week's stock pick. Hey, by the way, don't forget to give a thumbs up, please. And I really appreciate everyone who's been giving a thumbs up. We're seeing a huge difference in our latest videos comparing to before. Also, one other thing before we cover the number 3 stock pick, our free membership to our chat group is now reopened for second enrollment. Same thing as before, 20 individuals, limited to 20 individuals. Before that is closed for another month or longer. So just in time for Valentine's, if you know anyone that may be interested, hey, share them the link. It'll be down in the description below the video. 20 individuals for free membership to our trading group. Next one, LMT. Thank you for a new member sharing the ticker with us and asking about it. So when we talked about it this is a very interesting chart because this I think it's brought to my attention that it's one of the largest arms dealer or something like that, something along that line. Arms production maybe. Looking at this chart was, regardless of whether there's going to be war news in the Euro area, we're looking at this chart backtest the money line. So we lost the money line on this gap down, and then it has been on a huge run, broke through again, and now we back tested. Not to mention, look at where that back test came from. It back tested alongside this short-term trend, lower trend line as well. Boom, continuation, volume coming in. Now there was a slight increasing in bear volume, but because of what's going on overall in the news world, in the euro side, there's a huge pop in bull volume. This is very significant. Now with this, as long as we don't lose this lower trend line, I don't think there's going to be a short-term concern. Now there is going to be a loss of this short-term trend line. I would anticipate sometime in the future, because this is relatively a huge momentum. Okay, can't really keep this up for that long. If you look at this, RSI, daily RSI has gone from 47 all the way up, and there's already a bear divergence that's potentially negating right now. There's a bear divergence over here. Higher prices, lower RSI, lower whichever one you use, whether it's RSI or momentum or MACD kind of thing. Daily bear divergence, lack of follow through. Now we break new highs on Monday. That bear divergence is going to be negated. Very, very strong chart. LMT, Lockheed Martin Corporation. That's pick number 3. And number 4, I'm a little bit more uncertain about, but I do like where the chart is at. I do like the relative strength versus market. This is a nice breakout. Okay, increasing bull volume. It did get shut down a little bit Thursday, Friday, that upper wick due to the market, but it's actually holding up very decently. Now, if we were to look at AMC, GME, it should be a relatively same chart. Where in the case of GME, if I remember right, it should be 1 day ahead. So it's 4 days green above upper trend line, versus AMC is 3 days green above trend line. So AMC could be a laggard play. Very similar chart. Looking at this, holding up very nicely. AMC, GME, meme stocks, maybe back. Right, so that's it for stock. That's it for this week's stock pick video. For some reason, not really talking properly, so I'm gonna stop talking. But hey, don't forget to give us a thumbs up, please, as well as check out our link to our free membership to the trading group. Newest members, I want to say I have nothing but good feedbacks, but I'll let them speak for themselves. Not really that big into advertisement. If it's something for you, check us out. No pressure. Thank you for watching the videos. If you know anyone that may enjoy the content we share, please consider sharing our channel with them, or sharing our new link to our Slack group with them. Alternatively, if you really love that someone that you're sharing the link to, consider doing a 7-day free trial instead, where you will get full access to our Slack for that period of time before getting converted to a free member. Again, thank you for watching the video. Smash that like. I will see you guys in the next video.